Coming up on Business Incorporated, Nigeria's inflation rises to 16.47% in January from 15.75% in December 2020. And new WTO chief Dr. Ngozi Okonjo-Iweala says the trade body is working on an investment facilitation agreement for the AFCFTA. An international finance corporation expands its support to subnational entities in Morocco. Hello and welcome to the program. I'm Ladi Williams. We begin today's show with data released by the National Bureau of Statistics showing that Nigeria's inflation has risen to 16.47% year-on-year in January, indicating a 0.71% increase from the 15.75% recorded in December 2020. On a month-on-month basis, the headline index increased by 1.42% in the month under review from December's 1.61%. According to the report, food inflation rose to 20.57% in January compared to December's 19.56%, while core inflation, which excludes the price of volatile agricultural produce, stood at 11.85%. The urban inflation rate increased to 17.03% year-on-year in January 2021 from 16.33% recorded in December 2020, while rural inflation rate rose to 15.92% from 15.20%. Let's turn our focus to the markets, which were mostly positive at intraday. Nigeria's main index reversed Monday's positive sentiment and was lower, 0.05% lower. On the flip side, South Africa's GSE rose 0.19%, while the EGX30 in Egypt jumped 0.27%. Kenya closed Monday's session positive. And it was a similar picture in the Middle East, where most markets were in the positive territory except one. Only Dubai's index declined, shaving off 1.20% at intraday. The Abu Dhabi index, on the other hand, rose 0.27%. Elsewhere in the region, Saudi Arabia's index advanced 0.34%, while the Qatari index was 0.03% higher. And European markets were slightly higher today as hopes of an impending economic recovery underpinned by persistently low interest rates continue to drive risk on trade. Let's talk to Chelsea Delaney now for more updates. Hello, Chelsea. Great to have you. So Germany's economy minister met today over video with the heads of 40 trade organizations who are increasingly frustrated with the country's coronavirus strategy. What was the outcome of that meeting?
Well, there really isn't much to show from today's meeting. And coming into today's meeting, things had really started to bubble over. We saw protests from business organizations today in front of the economy ministry in Berlin. And businesses are very frustrated that we keep seeing lockdowns extended here. And there isn't much clarity on when they will end and when businesses will be able to reopen. So after Germany extended its lockdown into March last week, we did see more and more businesses calling for a clear plan. So all of that led up to today's summit with the economy ministry and the heads of these 40 different trades organizations. And what they discussed was potentially laying out a clear timeline and a clear plan for a reopening of the economy. So businesses want to know what is the level at which their business will be able to reopen, when could they potentially see that happening, as well as what the plan is for vaccinations in terms of the economy as well. So they haven't really come up with that plan yet, but they do plan to work on that over the coming days in the economy ministry. The other big topic today was the government's aid for the economy. Many businesses are still waiting for government aid that was promised to them back in November and December. So they've been waiting for several months now, and all the while their businesses have been closed. So that's really created a lot of frustration. And after today's meeting, the economy minister did pledge to look again at this system and see if there's other ways that they could potentially speed up that aid getting to businesses, because it's really pushed a lot to the brink.
And almost a quarter of Germans were working from home at the end of January. That's according to a new survey And the government in January made the right to work from home statutory. Is this the response that we're hoping for?
Well, it's definitely an improvement. Back in January, the latest data had shown only about 14% of Germans were working from home at the end of last year, and that was seen as really a big problem because of the coronavirus situation. That's clearly too many people in offices, too many people on public transit. So the government had really tried to put in place rules that would allow more people to work from home with the goal of bringing down infection rates and bringing down the number of people on public transit and out and about because of their work. That has worked to some degree. In January, the number of people working from home rose to 24%. So that's clearly an increase from 14%, but it's still below the high we saw last year at the beginning of the pandemic. And I would say it still shows that many people are working from home when they could be working, or are working still in offices when they could be working remotely. So I'd say it hasn't been a smashing success for the German government, but it has helped to some degree to bring infections down.
And banking giant Morgan Stanley has moved its head of global capital markets to Frankfurt in the wake of Brexit. How big of a boost has Brexit been for Frankfurt?
The end of the Brexit transition period has brought more jobs to Frankfurt and more money to Frankfurt. The German central bank expects about 2,500 jobs to move from London to Frankfurt as a result of Brexit. But I'd say it's not quite the boom that people had hoped for. When Brexit the process initially began, people had talked about tens of thousands of jobs moving to Frankfurt, about it becoming really the new financial hub of Europe. And we haven't really seen that happening, in part because London's, even though it is starting to lose ground in things like stock trading, it still does have some really crucial businesses like derivatives clearing, some kind of technical, complicated businesses that have been built up over decades that aren't so easy to replicate here in Europe. So while we are starting to see, on the one hand, more and more businesses coming here, more and more jobs coming here, as well as to other financial capitals around Europe, such as Paris or Amsterdam, I'd say London is still going to remain a major financial hub for the time being.
Anyway, we'll see how much business Frankfurt is going to be taking. Anyway, thank you for the update, Chelsea, and do enjoy the rest of your day. And in the UK, the stock market opened higher, with the FTSE 100 gaining 40 points. That's its highest level since 15th of January, as the FTSE heads back towards the 11-month high seen earlier this month. The pound has also continued its bullish run. Let's talk to Juliana now to get more updates. Thank you for joining us, Juliana. The pound continues to strengthen. Good afternoon. It continues to strengthen against the dollar, and the FTSE 100 also trading higher. Bring us up to speed with intraday numbers and the market drivers.
Yeah, as you said, sterling continues to rally high. It's up 1/5 against the dollar today.
Yeah.
The triple-digit gains we saw on the FTSE All-Share we're not really seeing today, and that's because the pound is pushing down the internationally focused FTSE All-Share. So at intraday, the All-Share is up 0.22%. The FTSE 100 also up by 0.27%, and the FTSE 250 is up by 0.24%. In the currencies market, the British pound up against the US dollar by 0.14%. Down, though, against the euro by 0.11% and up against the Japanese yen by 0.02%. When it comes to the FTSE All-Share, we've actually seen a rally in the oil majors, both BP, Royal Dutch Shell, they're up by over 1%. And not too sure why, but the Asia-focused banks are doing pretty well at intraday. HSBC, Standard Chartered, all up by over 1%, and Prudential as well, the insurance advisory, they're up by 1.3%. It goes without saying that the UK vaccine rollout is doing pretty well, which is why we're seeing the pound still improving on that rally.
And Virgin Wines is to float on the London Stock Exchange next month with a valuation of about £100 million. The company follows Deliveroo and Moonpig. What is driving this IPO by Virgin Wine?
Well, in one word, it's called booze. That's what it's called. During the lockdown, which has been going almost a year now, Brits have been stocking up on their wine. They haven't been able to get it in pubs, bars and restaurants because they've been closed. So they've been ordering in wine, and Virgin Wines, which has been going for about 20 years now. It was previously associated with the Virgin Media Group. I believe they bought a subsidy from the company. But yes, last year was a boom year for them. They sold over 1 million bottles because people just can't get enough of the stuff. So they have decided to float. They will be floating on the junior London Stock Exchange, which is the AIM exchange. That's put it to a valuation of about £100 million. Really good British business news stories. They've also got a unique subscription-based service. So for those who like to have as much wine as they can, you can subscribe to the service and you will be delivered wine on a regular basis. So the last time they checked, I believe they've got over 169,000 subscribers, which could greatly improve if we don't get out of this lockdown fast enough.
Well, that's actually a big number. Anyway, Britain's competition watchdog CMA has warned that eBay's $9.2 billion deal could create the world's largest classified ads business and raises competition concerns. What are the concerns here?
Well, the concerns are to put an ad out, consumers would pay more, there'll be less competition on the market, and it could just basically scrap out the competition. This is what the Competition and Markets Authority is saying, and this is because Adavinta, which is a Scandinavian-owned classified ad company that puts ads out across Europe, last year in July, they decided that they wanted to buy Gumtree, which is a British-based classified ad company. You can sell anything there, from flats to second-hand furniture to health and beauty services. That was founded in 2000. It was sold 5 years later to eBay. We already know eBay is the world's largest marketplace, and they put a deal in. They put this £6.2 billion deal, and now the CMA are having a closer look at this deal, and they just think that it may be putting out the competition and not giving consumers the best for their money. If the deal is done, then it would make this new Adventus business one of the most lucrative classified ad businesses in the world. And so the company have until next week, Tuesday, February the 23rd, to kind of resolve some of the issues that the CMA have flagged up. But they're still confident that this deal can go through, which would mean, yes, that this is the biggest online advert, online space.
Talk about buying the competition. Anyway, Juliana, thank you for the update. Do enjoy the rest of your day. And stocks in Asia Pacific rose today as markets in mainland China remain closed for the Lunar New Year holiday. Hong Kong's Hang Seng Index, which returned to trade following holidays in the last few days, jumped 1.81% as of its final hour of trading. In Japan, the Nikkei 225 advanced 1.28% to close at 30,467, while the Topix Index gained 0.57% on the day to 1,965. South Korea's Kospi edged 0.52% higher to close at 3,163.25. Stocks in Australia also rose, with the S&P ASX 200 closing 0.7% higher at 6,917.30. MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.48%. And futures contracts tied to the major U.S. stock indexes rose in early morning trade after finishing strong last week. Dow futures rose 212 points, suggesting an implied open of about the same magnitude. S&P 500 futures and NASDAQ 100 futures also traded in the positive territory. The Dow has gained 4.9% in February, while the S&P 500 and the NASDAQ have rallied 5.9% and 7.8%, respectively. The S&P 500 has raked in 10 record closes in 2021. Easing fears across Wall Street are likely in large parts thanks to the rollout of the COVID-19 vaccine, economic reopening, and expectations for more fiscal stimulus. I will take a break now. When we come back, we'll be discussing Limestone. Just stay with us. And on our commodities market update today, we'll turn our focus to limestone. Limestone is a common type of carbonate sedimentary rock, and it's composed mostly of the minerals calcite and aragonite, which are different crystal forms of calcium carbonate. The global price of limestone has varied between $30 and $38 per ton over the past year. In Nigeria, the mining and quarrying sector declined by 13.22% in the third quarter of 2020. But the quarrying and other minerals subsector grew by 41.81% in the same period. Joining me now to talk more about limestone in Nigeria is Lawrence Messi, a research analyst at financial derivatives company. Thank you for joining us, Messi. Great to have you.
Thank you.
Yeah. So considering that limestone makes up 75% of cement, is there any chance that the retail price of cement in Nigeria will reflect the market dynamics of limestone?
Yes, of course. I highly believe that the retail price of cement will reflect the market dynamics of limestone. However, that's not the only factor that affects the price of cement. As we've seen, around August to September of 2020, the price of cement was around 2,500 naira to 2,600 naira. But in January right now, the price is about 3,300 naira. In some states, it's even up to 4,000 naira. This is accountable to seasonal factors. The wet season or the rainy season has less demand for cement, while the dry season has higher demand. And that is a reason for the increase in the prices. Also, we've seen an increase in construction activities and civil works projects by the government. To name a few, we have the light rail projects, we have the Eco-Atlantic, we have many road projects that are being carried out. They have the Gateway Airport at Abuja. All these construction projects need cement as a binding agent for construction. This increase in demand has also led to the increase in price or the variation in price of cement over time. However, these are all external factors, but limestone as an internal factor would increase the cost of production. But like you said, it's been relatively stable. But we highly expect that any volatility in the price of limestone will show up as changes in the price of cement.
Well, the dampening effect of COVID-19 on the Nigerian economy can be seen in the GDP growth, which is currently at negative 3.62% and projected to be flat in Q4 20. Do you think that the current recession will lead to a decline in the production of limestone related to commodities such as toothpaste, food, and additives?
Yes, of course. We believe that the recession is going to lead to a reduction in production. This is simply because in a recession, prices tend to go higher and the typical household's purchasing power is reduced. And when this happens, families have to reduce their consumption. But as you may know, these products, toothpaste and food, they are what we term in economics as necessity goods. So they have what is called, they are relatively inelastic. So regardless of the price, people will still consume, but they will ration their consumption. So the recession also affects producers in the form of forex illiquidity and higher logistics costs due to the constraints and infrastructure problems. So on the producer end as well, they are also affected. So we expect that production will reduce in general terms. However, we expect that when the economy does begin to recover, that there will be a general pickup in the production of limestone-related commodities. And
limestone is rich in amounts in Sokoto and Benue. However, these states have had societal unrest over the period. Based on this fact, how would limestone production be affected in the country, and what would be the probable effect on the price?
We highly expect that prices will increase. My reason being that business owners, corporate executives, investors, they tend to look at 6 core factors when testing the viability of a business, but we can't go into all of that. But we'll look at one factor, which is socio-cultural or the social factors. So when there is societal unrest or insecurity, as we may put it, business owners tend to do two things. The first of which is to divest, that is to pull out their investments or to stop the project entirely. This will lead to supply shortages and scarcity of the product as well. And because of scarcity in the activities relating to limestone, like the extraction and the quarrying, we expect that the price will rise. The second thing that business owners would do is to invest more in security to protect their investments. And when that happens, overall cost of operations are also increased. And this will be translated in the form of higher prices to consumers. And so because of these two factors, these two courses of action by business owners, we expect the price of limestone to rise due to societal unrest. To give a live example, one of the major players in the cement industry is actually situating a plant in Sokoto. So if the social unrest continues, they will have to invest more in security, and that will lead to higher prices.
All right, Lawrence Messi, thank you so much for your time, and do enjoy the rest of your day. And the newly appointed Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, has been speaking about how the global trade body can support the full implementation of the African Continental Free Trade Area Agreement, which commenced on January the 1st, 2021. Dr. Okonjo-Iweala, at a press conference yesterday, shortly after her confirmation, says that the WTO has been supporting the initiative through the design of the AFCFTA, but there is need to boost investment on the continent. Do take a listen.
Africa is at a unique juncture where it's agreed one of the largest, it's implementing one of the largest free trade agreements in the world, and it has a long-term vision of perhaps having a complete free trade area on the continent. And so the issue is, what are the sticking points? Where can the WTO be useful? Well, I want to say immediately that the WTO rules and the WTO institution has been an inspiration for the design of part of the African Continental Free Trade Agreement. So the WTO has already lent its body of institutional knowledge and wisdom to help design this. But building on that, we need to see what are the capacity constraints in implementing this. Can we use aid for trade to support the secretariat of the AFCFTA? Can we find technical assistance where it's needed to help break any log jams? The second way is the WTO is working on an investment facilitation agreement. I think pushing that hard and trying to see how we get investment into the continent will be very important, and we'll do absolutely everything to try and facilitate that.
And International Finance Corporation is expanding the scope of its support to subnational entities in Morocco through a new partnership with the Wilaya of the region of Marrakech Safi and the Regional Investment Center to attract more investment and improve the business environment. Through the partnership, IFC will support the Marrakech Safi Regional Center for Investment, which serves as the service center for the private sector in the region via business creation, investment promotion services, and business environment improvement. There will be a special focus on prompting the region as an investment destination and reducing payment delays for businesses whose liquidity has been further constrained by COVID-19. Like many other regions in the world, Marrakech Safi is a major economic center in Morocco, has been hit hard by the COVID-19 pandemic, induced a downturn in tourism, a key industry in the region. And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.